So I discovered a pattern that has been draining my balance for 3 months. 3 days a week, a stable negative balance weekly. I conducted an experiment and found out the reason that changed everything. I had long wanted to raise my trading level. I thought for a long time about what to change. I went through strategies, changed indicators, looked for other assets, nothing changed. At some point, I stopped looking for the problem in the tools and opened a spreadsheet with my trade history. I have been trading long enough to know the result does not always depend on a strategy. Sometimes you do everything right. The signal is clear, the entry is logical, but the trade goes the wrong way anyway. And there can be several such days in a row. For a long time, I blamed it on the market, on volatility, on a coincidence. But at some point, a feeling appeared that something here is not accidental, that these losing streaks have a pattern. I just never measured it. So I decided to check. I exported my trade history for 3 months. I broke it down by day of the week, not by assets, not by strategy, specifically by day. The spreadsheet turned out simple. Day, number of trades, final result. And the pattern appeared immediately. Monday, Friday, Sunday. On these days, the result was worse. Sometimes it went negative. Wednesday and Thursday brought stable profit. Tuesday, around zero. I double-checked. I took data for 6 months. The picture was the same. This was a system, and I decided to figure it out. I began to analyze each day. Monday, after the weekend, institutional players are just entering positions. The market has not yet decided on a direction. False movements, unpredictable volatility, I knew this. But I traded with the same strategy as on Wednesday, not because there was a reason to enter. Friday, large players close positions before the weekend, the liquidity drops, movement become jerky. Plus, by the end of the week, psychological fatigue accumulates. If the week was positive, complacency appears. If negative, a desire to recover losses. In both cases, decisions are no longer technical. Sunday, OTC markets, synthetic quotes, and algorithms work differently. The conditions are fundamentally different. I traded on Sundays deliberately. I thought I knew how to work with this. The data said the opposite. 3 days, the same story. I was applying the same logic to fundamentally different market conditions. This was not a question of discipline. This was a question of approach. I formulated a hypothesis. If on these 3 days I trade differently and adapt the entry to the market character of the specific day, the result will even out. I set up an experiment. 2 months on Monday, Friday, Sunday, I trade according to an adapted scheme, fewer trades, different entry points, more patience before the signal. The first week was difficult. On Monday, the market was moving, and I saw entries that I would have taken without thinking before. But now I waited. Not just any signal, but a signal that works specifically in Monday's conditions. Inside, there was a feeling that I was missing something obvious. I held on. I wrote down the entries I skipped just to check later. It turned out more than half would have closed negative. At the end of the week, I almost gave up. On Friday, there was a clear signal. I skipped it according to my new rule. The trade would have closed in profit. I sat and watched the chart. Then I opened the entire list of missed entries for the week, more than half negative. I kept the rule and continued. On Tuesday, I sat down at the platform in a different state. There was no burden of yesterday's decisions. There was no desire to prove something or recover losses. Just a clean day and a clean chart. I waited for a signal and entered, without rushing. At the end of that week, the result turned out better than any week of the previous month. Moreover, all days, including Monday and Friday, closed in profit. I continued the experiment. The second month was more interesting than the first. I was no longer waiting for the result with anxiety. I was observing how the system works. On Monday, I entered only on clear reversals when the market finally decided on a direction. Not at the beginning of the day, but when the volatility calmed down and the movement became readable. On Friday, I reduced the number of trades to 1 or 2. I did not chase the volume. On Sundays, I only worked with OTC assets whose behavior was predictable according to my statistics. This was not a new strategy. It was the same combination, but with different filters for each day. Fewer entries, more patience. A clear understanding when this day gives a signal and when it is just noise. By the end of the second month, I looked at the spreadsheet and did not recognize it. Monday, Friday, Sunday stood next to Wednesday and Thursday, approximately the same, without drawdowns. The hypothesis was confirmed. The problem was not with the days. The problem was that I was applying the same logic to different market conditions. As soon as I adapted the approach, the picture changed. The 3 days that were pulling the result down became as stable as Wednesday and Thursday. I tested it for 2 months. Now I will show you exactly how, right on the platform. And by the way, spreadsheet template that I used for analyzing the statistics by day and a detailed breakdown of the adapted approach for each of the 3 days I have posted in my Telegram. I also conduct live trades there in real time. The link is in the description. Check it out. I'm pretty sure you will find something useful. So first I will set up the platform. Chart type I set it to candlestick, time frame today 1 minute, indicators SuperTrend and Williams. Now I will set up the indicators to make the strategy work more precisely. SuperTrend will show which side the trend is on currently. ADR period I set to 10, multiplier 2, sensitive settings, so that the line quickly catches reversals on the 1 minute chart. Williams will show which zone the price is in. I set the period to 7, short for early signals on the 1 minute chart. So I'm starting to trade. Let's go. Today, that very Monday that had been pulling the balance down for 3 months. I open a short, $88 expiration 1 minute. Below the chart, Williams broke above the -20 mark into the overbought zone. The asset flew too high, the buyer's pressure exhausted. SuperTrend confirms this. The line flipped above the price, changed sides, the trend switched downward. And the candles themselves give the same picture. The moment for entry is obvious. We wait for the close, and I received $168. The first one worked cleanly, all 3 signals matched. We continue, this time long, $168, 1 minute. Here the situation is reversed. On SuperTrend, the line turned over, went under the price, the market flipped to growth, the trend just changed. And Williams solidifies the picture. The line jumped out of the oversold zone, past the -80 mark. The momentum shifted to the buyers. On the price, you can see how the market was bought up. Momentum appeared. We wait for the trade to close, and I received $319. The strategy works in mirror image, both short and long using the same logic. So we close out the triple, long again, $319, 1 minute. Here I suggest you read the chart yourself while countdown is running. The clues are already there. Look how Williams is again pressed against the -80 mark, a familiar zone about the candles. SuperTrend changed sides and the candles speak for themselves. The picture repeats, the entry is justified, we wait for the close, and eventually we receive $613. 3 entries, 3 profits, Monday, that very day that had been pulling the balance down for 3 months. Now, finally, we've got a change in direction and it seems like it is going up. And by the way, if you want to analyze your own statistics and find your weekdays, I have posted step-by-step breakdown in Telegram on how to do this in half an hour and how to adapt the approach for each day. The link is below this video. Check it out, you will not regret. So I went into this experiment with a question: why some days are consistently better than the others? The answer turned out to be not in the market, but in the approach. Discipline is not trading the same way every day. Discipline is adapting the approach to the conditions of the day. For a year, I applied the same logic to different market conditions, and it turned out this was the source of instability. The practical algorithm here is simple. Export your statistics for 3 months, break them down by day of the week, find the days with a consistently weak results. Do not remove them. Analyze why they're weak. Adapt the approach. Use a strategy that is tailored specifically to those conditions. There are no bad days for trading. There is only the wrong approach to different days. Well, now you know where to look. And by the way, last week, I still broke my rule. I entered on Monday out of old habit. And by the way, last week, I still broke my rule and I entered Monday out of my old habit without adaptation. Just like usual, a loss. I closed the platform and wrote myself a note. Monday requires a different approach. Always. All the nuances that I have already found and tested on the platform, I'm analyzing in my Telegram. so that you know about them before you encounter them yourself. The link is below this video. Check it out. I'm pretty sure you will not regret. Have a wonderful and productive day, and I'll see you soon.